Hello and welcome to an FX Times daily video recap. I'm CMS market analyst Nick Nassad. Today is Thursday, November 12, 2009. Today's trading was characterized by Greenback strength as there was an increased uncertainty about the speed of recovery in global demand, which eroded appetite for assets sensitive to economic growth. That prompted investors to seek the safety of the US dollar. The risk aversion sent U.S. stocks and oil lower despite better U.S. jobless claims data. However, this dip in risk sentiment may be temporary, as we saw the Dow Jones Industrial Average rally for 6 consecutive days, hitting new highs yesterday, and this could be a bout of profit taking by investors. Here we're looking at the euro-dollar pair, and we see the sharp slide in favor of the greenback in today's trading. We moved from a level at a high around 1.5010 all the way down to 1.4830. In yesterday's daily recap, we set up a couple of important support lines, one around 1.4940 and another around 1.4910, which were both broken in today's trading. If we zoom this pair out to show a little more past history, our new level of support will come at the support level for this period of consolidation that we saw to end last week. That's around 1.4810. This is an important level to watch overnight and in tomorrow's trading, and could determine the fate of this pair. If we fall below it, we could see a test back to this low around 1.4650, or we could see a bounce back upward. Overnight, there was some slightly worse than expected economic data, as industrial production in the euro area rose 0.3% in September, which trailed analysts' estimates of a 0.5% increase. In a look at that release, we see that forecasts called for around a 0.6% increase, though one thing to take away in the positive side is that this was the 5th straight month that output has grown, and it was led by a higher increase in capital goods. Also, on the year, output was down 12.9%, which was the smallest annual percentage drop since December. In a look on the chart on the right, we see that industrial output has bottomed out following its sharp slide throughout most of the year, and we are seeing these trend lines moving up again. In a look at a U.S. fundamental release, we saw stocks dip despite a better than expected report from the U.S. labor market. U.S. stocks were lowered despite a better than expected release from the U.S. labor market. Jobless claims for the week ending November 7th fell to 502,000, the lowest level they've been in 10 months. Continuing claims, meanwhile, for the week ending October 30th fell to 5.63 million. U.S. jobless claims hit a high around April, and the trend has been falling since then. The 500 level, if we see claims at that level for several weeks in a row, could be the first sign that we might see some positive growth in employment in the U.S. Turning to the pound-dollar pair, following our rather large swing down yesterday on shifting expectations regarding the Bank of England quantitative easing plans, today we saw some consolidation in this pair. That could mean that the Bank of England news has been priced in, and traders are now looking for further information for this pair. Our new support now is at the 1.6515 level here, which matches up pretty close to our support from last Friday's session. We had a short-term downward sloping line of resistance today that was cracked in late New York trading after we had looked like we were setting up a bit of a descending triangle pattern. If we zoom this pair out a little bit, we see that the 1.65 level now becomes an important level of support that, if broken, could see this pair slide further down to perhaps the 1.6250 area. But if the support holds, then we could see the pound trying to reclaim some of these losses from yesterday's session. In the dollar-yen pair, we see greenback strength as well, as the greenback rallied about 85 pips following a test of the 89.70 area prior to the beginning of New York trading. We had set up these support and resistance lines for a channel. We're using Mondays and Tuesdays highs and lows, and we see that we were able to break above that with the greenback moving to a new one-week high. Zooming this pair out a bit, we see that we broke a downward sloping line of resistance. If I connect the highs from October 27th and 28th, along with the highs from November 5th and 6th, ignoring this shadow here from this candlestick. We see a pretty good break around the 90 level, which gave the dollar more strength to move up in the technical picture. Our up move stalled around the 90.60 area, and now that'll become our new short-term level of resistance. In a look at an Australian release, we see that the Australian economy was able to add 24.5 thousand jobs in the month of October. That beat forecasts, which had called for a 10,000 drop in jobs. It's the second month in a row that job growth has been positive in the economy, though the unemployment rate did edge up to 5.8% as was forecast. In a look at the Australian dollar-US dollar pair with 15-minute candles, we see that the employment change figure did boost the Aussie to a new 15-month high around 0.9370, but with risk aversion being the dominant theme in today's trading and Greenback strength being the dominant trend, we did see the Greenback pair those gains and then fall. The Aussie fell even lower down to the 0.9210 area. The 92 level was where we started this week and will now act as support for this pair. If we zoom this pair out, we do see that we've had a rather strong rally since November 3rd in this pair, and today's trading may have reflected a correction. And a look at a final pair, we see that the US dollar Canadian dollar pair rose in favor of the Greenback as the downward momentum in the pair stalled out prior to reaching the 1.04 area, with oil taking a tumble, sliding around 3% to below $77 a barrel, and weak US stocks. It hurt risk appetite in this pair, which usually favors the Canadian dollar. Yesterday we showed a Fibonacci retracement of this pair, and we saw that our support yesterday was near the 61.8% area, and we have been able to rally from there. We paused for a short time around the 58% area, but then we even moved above that. So we'll see what we get in tomorrow's session, whether this bout of risk aversion continues or if the Greenback strength that we saw today wanes in tomorrow's trading. In fundamental releases that are coming up tonight, we see Japan posting its industrial production and household confidence data, while overnight we get preliminary third quarter GDP data from both Germany and the Eurozone, along with Switzerland producer and import prices. Tomorrow, the US will post its trade balance for September, its import price index, and the preliminary version for November's University of Michigan Consumer Sentiment Index. And that'll do it for today's report. Come see more analysis and videos at our site, fxtimes.com. Thank you for watching, and happy trading.